Good afternoon again. Uh, this is a slightly different session. We'll have three group heads presenting on stage one by one. They will be focusing on retail branch banking, government and institutional business, and wealth. We have with us Mr. Arvind Vohra, Group Head Retail Branch Banking. He will go first, followed by Madam Smita Bhagat, who is a Group Head for Government and Institutional Business and Alternative Banking Channel and Partnerships. And then we'll have Mr. Rakesh Singh, who will speak on wealth, and he's the Group Head for investment banking, private banking, marketing, and products. At the end of all three presentations is when we'll be able to take the questions. I now request Mr. Arvind Vohra to come on stage or start his presentation.
Well, thank you, and good afternoon, everyone. I hope everyone finds this session really enriching and interesting, given the fact that we've been talking about various aspects of the retail customer franchise build-up, retail deposits, and how we thread actually all the financial solutions around the customer life cycle. So just starting with the strategic imperatives in terms of, I'm going to focus on where exactly we are different than most of the other banks in the industry. We'll talk about what are the differentiating results we have produced, and we'll talk about that how is the future looking like in terms of add-on initiatives and the confidence on the sustainability of our momentum that we sort of built up. But starting from the strategic imperatives, when we look at branches, the term is probably a misnomer in today's context in the way we see it. For us, the branches are now evolving into, first of all, multiple formats and more as engagement centers, because we want all transactions to really become digitized and technology-led. But still, the financial solution conversations, that's where the primary role comes in. So how do we acquire customers, how we onboard them, how we do the life cycle management, how are we building the service-first culture, how are we building the combination of the phygital and digital, the humanization factor and the technology factor, and then the growth segments on rural and government that we're going to just talk about. But before that, let's see what are the results that we've produced so far, and then we'll get into the differentiators. So this year, and this is data I think all of us have, we've added 10 million customers in 22-23, highest by far in the industry any bank would have added. Retail deposit growth, we have registered 24.07 YOY, and an incremental deposit market share on a CASA level of almost 33%, right? And at a deposit level of almost about 21%. That essentially means that if 100 rupee came into deposits in the banking industry in our country, in CASA we got 33 rupees out of 100, and in deposits we got 21 rupees out of that. Right? And all of that, when we look at our cost of funds, and I'm sure all the leading banks' information is available with you, it has not come at a premium pricing. It has come at a competitive benchmark pricing in terms of where we strategically see our stable FD pricing and the other elements should be. So it's come at a very, very sort of benchmark cost of funds that the internal targets that we had, the levels that we do not want to cross. It has not come by becoming aggressive on pricing of any of the liability products. So how exactly we are doing it, and what's the confidence that we are going to be able to sustain this momentum? So what are we doing differently? Are these 7 areas. First, we'll talk about the multi-format distribution, because branches no longer is the only format of distribution, and we'll talk about how, and the role of branches also change, and how we identify, how we look at a micro-market approach, how we look at tracking the profitability of them. Customer life cycle management, role of analytics there, and what is the advantage we're building on analytics, some high-level add-on initiatives we'll share with you. How do we do scoping, right? And these are the things which are very difficult to copy, because this is so ingrained in the way we have built our machine and we execute that. Segmented propositions, end of the day, a lot of products at one level can be seen as commodities, I mean, what's the big deal in savings account, right? Except the service part where we can build differentiation, which of course is very important area, but along with that, can we understand the customer life cycle of, senior citizens and different segments and build specific curated propositions for them. Relationship management architecture, service first, and rural business, where we're going to put up a big focus area. So I'm going to talk about each one of them over 7 small themes that I have. But yes, the 8th factor, which I'm not going detail into because I'm sure Srini would have covered that, is the merger. And I saw some questions came up in Arvind Kapil's presentation, where 70% of the mortgage customers do not have primary banking relationship. And friends, we are no longer seeing customers as liabilities customers or PL customers and BL customers. You know, customers are customers. The entry door could be different. But objective is that how do you thread the financial solutions partnership with them through the life cycle and be able to extract the customer lifetime value. So it's the customer lifetime value that, you know, we are building through this set of differentiators. And those 70% customers also, while of course we will not mandate and all, but we are going to be providing banking services from the HDFC Limited branches today. So they will also transform in that sense in terms of the range and scope of things that they present. And which is also very customer centric, because you know, somebody has to do an NEFT, RTGS while he's in the HDFC Limited branch, they can do it straight away there and then itself. We'll provide all of these services right from there. Nomination, re-KYC, our analytics engine, NBA. So all those conversations, bundling, propositions will come alive for them in that environment. So that's a big synergy lever that will come alive, that will help us to penetrate into that 70%, as well as, of course, the incremental business comes in with the primary banking relationship. So that's the way to build primary banking relationship with them and be able to extract out of the customer lifetime. But that's the 8th factor which differentiates us in today's context, because that's the mega merger we are going to be going through. I'll quickly go through these 7 themes. The first is the multi-format distribution. So branches, as I said, are more and more evolving into engagement centers. The approach is phygital. Our vision is probably to, you know, have in next 2 to 3 years completely paperless branches, which means that there is absolutely zero paper for every transaction that we want to do. And some of the journeys that we have built today that I'm going to share as we go through in the presentation will tell you how we are sort of building that credibly. Small smart banking lobbies and digital banking units, these are very cost efficient 500, 600 square feet units, but providing the entire range of banking services in a micro market, because these things are benchmarked to the catchment potential or the town potential or the you know, captive campus potential we are in. And then of course the business correspondence that Smita is going to talk about in greater detail, which is a hub and spoke around the branches into the new towns, the smaller centers where the potential could be low for us to be able to put up a full-fledged branch. But the big important question is that how do we identify, right? It's not really about giving targets to all the cluster heads, hey guys, you have to open 2 each because, you know, we have a mandate. And how do we track profitability, right? So we have a multivariate model that we evolved in last 2-3 years, where we look at not just the population, RBI deposit size data, the bureau data, asset quality. We are even going into the extent of looking, you know, the climate risk data, you know, where some of you are interested in ESG investing, that, you know, what is the climate risk that we force and should we, is from that point of view, is that the right location? Delinquency data. And within so it's identification at a town level, center level, pin code level, and then within those towns at a micro market level based on where the places of interest are. Where is a university, college, hospital, large residential society, which will offer the right, you know, right location for it. And you're seeing the early impact of this multivariate strategy. 80% of our expansion has happened in high potential pin codes, right? But everything is not historical. And 20% is also in medium term potential, and you will ask me why. Now there's a Xavier airport coming up in Noida, close to Delhi on the other side of Gurgaon. Of course, that will not reflect in the history of what we see today, but in 2 years' time, 1 year's time, that is going to be a completely different place. So some of the future developments we overlay on top of that to arrive at where exactly we're putting. Our break-even period has been coming down. We have very, very rigorous profitability model tracking for branches, not just for branches. Branches, smart banking lobbies, DBUs, BCs, of course, are on the variable model, and some of the new initiatives also that we're putting, like Bank on Wheels. So from about 23 months to 18 months. But more importantly, so there's a direct benefit of branch expansion in terms of what that branch brings along, or the unit brings along, or that SPL brings along. The second is the network effect of you know, expansion. And it basically means that in a district, if you had one branch which is already doing 1,000 crore, and you put up the second one in the 2 tehsils, and you put up 3 BCs in the small towns, the whole district grows, and the earlier branches also grow faster than before. Because now customer sees the right presence of the HDFC Bank brand and the banking services available more ubiquitously in that particular district. So you see the data where you know, the branches which was no expansion, we got 14% IDMS, incremental deposit market share. The district where the last 2 years we expanded once, we had 18% incremental deposit market share. But where we added twice, of course, with this multivariate model, not just by a blind-sided strategy, 22% incremental deposit market share, right? So this is the proof of the pudding in terms of how it is working to deliver the incremental market share growth, right, in a very, very cost efficient manner. And vision is, all 700 districts, 6,000 towns, and 250 lakh villages. We are there in about 170,000 of them. We'll have presence in 2 years with the right format, not necessarily a branch. It could be a branch, it could be a BC, it could be an SBL or a DBU, right? So that's the first lever. And then is, of course, when the customer comes on board, how do you do when you set up a branch? How do you do catchment scoping? How do you, get the acquisition, and how do you do onboarding? And how do you build recommendations in terms of understanding customer needs proactively and engaging with them, rather than just having a product-centric conversation and throwing them what you need to sell, rather than telling them or sharing with them a proposition on what they are looking for. So we have a very structured model for scoping, right? And that's why I was saying branch is an engagement model, right? It's first of all not at all inbound focused only, because we don't want people to come to branches, customers to come to branches for transactions. That should happen digitally, that should happen technology-led. So these are the 10 segments we look at in the catchment of every branch. We have sub-segments and we map customers. There are 3.9 lakh customers scoped in our CRM by customer, by details, potential, liabilities, assets, wholesale assets. I saw some conversations in the Rahul's presentations in terms of how much are the branches contributing. So last year, in terms of total assets, branches itself, we have dispersed more than 4,25,000 assets. So it's an integrated approach. It's not just liabilities versus assets. It's about extracting the customer lifetime value. And last year, when we delivered 22% incremental deposit market share, in 87% districts of the country, we have gained market share. So you can say virtually all the districts, majority of the districts, we are gaining market share, right? So this is going to be an even more significant business multiplier, and the way we do it is in terms of putting this plan together, tracking it customer by customer, having a customer by customer plan, conversion plan, conversations, Super 50 top-up programs where the seniors, the branch manager, cluster heads to big customers, they go and make calls and discuss propositions and bring them on to the HDFC Bank family for all the propositions that they need in their business or personal lifetime. And this is the second pillar. When you do the scoping, talk to customers, how do you build the need-based customer conversations? And we have analytics engine, the AML engine that Arvind was also referring to, but we have very discrete, where we look at all the eligible areas of pay, save, invest, sure, and we identify through surrogates, transaction data analysis, website analysis, what are the potential opportunities. We validate them with the feedback loop. So every RM in the branches and VRM can give a voice of customer, and that also gets fed back as a feedback loop to this. And all our marketing campaigns that we do through our platforms, where the customer feedback gets looped into it. And then that gets fed into what we call is next best action, right? And the incredible next best action is really about the intersection of customer propensity and the credit worthiness of the credit business rule engine, so that we get the top credit customers and we get the customers where we can talk about products and propositions that they need rather than we want to sell, right? So that's the incredible NBA. And then immediate NBA is where immediate intent to purchase is very high, right? If somebody is looking for auto loan on our website, I'm sure we all understand that we should be talking to him in 24 to 48 hours time, and not in the 30 days time when the RM or the concerned resource is supposed to speak to him. In fact, this will help us to transition. We need to talk about in banking industry, managed customers, non-managed customers. So the way our vision is, everybody will be managed, just that some of them will be managed digitally, physical RM and digital, and the rest of them will be managed digitally, right? So we've had 29% improvement in the NBA conversion versus business as usual. These are the growth numbers that you see from branches. But the big thing is that we are now working on NBA 1 2.0, which is going to leverage the account aggregator framework. I'm sure some of you would have heard about it in terms of how through the customer content it can give us the offers data, right? That can really dramatically significantly give us another layer of lift. And second, use generative AI to be able to present it in a context to our people at the right point in time, with the right set of customer, with the right set of proposition, And I think some of the stuff that we're planning to do right now is absolutely cutting edge in terms of the work that's probably happening in the world right now. So hopefully when we meet you maybe next year, you would have seen the results of NBA 2.0 that we hopefully be able to do over next few quarters. Similarly, on the liability side, value-based, these are the enablers, value-based and value enhancement through wallet share. Somebody living at Nariman Point, right? Having a 2 lakh average ticket size of the relationship, right? Do you think is under-indexed or over-indexed? Now, 2 lakh may be my portfolio average or slightly more than my portfolio average. But the potential, just from the address surrogate, you can find that the potential is probably 20x of that, right? So these are the approaches used in these enablers, and this has really significantly added to our growth in last 1 or 2 years. We won't share numbers, but I think these are some of the enablers that go into delivering the IDMS and deposit growth that you have sort of seen. Segment-led propositions, in a word which is increasingly commoditized. How do you identify the right segment with the customer's life-centric need, right? So if you have a super kids, then it focuses on a partnership with Jamboree through which we can bring the education-based counseling to the kids, or the other similar partnerships. Or for a super senior citizen special, cyber insurance, right? It's almost what doctors advise for them, because they are the guys who are most prone to falling to these fraud calls and all of that. So if FOC, cyber insurance for them, partnership with some through the elder care programs, and so on and so forth. And in each of them, you see that if you get it right, the multiplier effect on our averages that you get is anything from 3 to 5x. So super special, 6x of the savings averages, health cover FD, 1.25 of the average that we get, and MAMC and super kids similarly, a multiplier effect on the getting. And these are all, when you get these high quality customers, your credit cycle, the customer lifetime value, all of those things start to fall in place. Because if you have to give to a personal owner a proposition to a customer who is high in terms of the fundamental quality, the credit worthiness, etc., then the customer lifetime value is significantly larger, and that's what we can then extract through it. Relationship management architecture, we've spoken about it, largest in the industry. But the important thing is, even at that size, we have been growing the liability book of our relationship management 1.7x in last 3 years. All right. We rolled out the top of the end program Infinity, which is focused on ultra HNI, 5 crore plus CR, and 1,400 groups already registered. But again, at a top end, building up a multiplier effect in terms of values. Service first, we are sharing our net promoter scores here. I mean, there were questions in the previous 2 investor days where our managed HNW NPS score is higher than the overall. But more important than the score is how we look at the whole engine of building the service first culture. Even at a bank level that you see, not just our internal data. So on this graph, what you see is at the top end is an external benchmarking study by Bain, which talks about the benchmarking through it. And we deliberately not given the bank names, but if you see the indexing, the message is evident. And on the touch point NPS that we measure at every interaction, every transaction, so be it a teller interaction, an RM interaction, digital interaction, a customer request coming in, right? Everything is there. But more importantly, any instance where the customer is not happy, and we have 10-12% customer instances where customers are not happy, every detractor is called back. Every detractor is called back, engaged with, resolved. And that goes back into improving our voice of customer-led process improvements, digitization, and all of those areas. So you see some examples of the processes we have improved with priority servicing for senior citizen, HNW, base sales process that we're trying to institutionalize, deliverables tracking real time. So if somebody is ordered for a checkbook, on the through the link and the website, we provide, where exactly it is, so that the customers, like Amazon kind of an experience in terms of deliverables tracking. And Insta service journeys, or what we call walkout working journeys, is sort of a big part of that. I'm sure in our personal experiences, we would have looked at the Insta service journeys instruction areas. So address change sometimes can take 3 days. I was talking to somebody who didn't know about it, and we claimed that it can happen in 30 3 minutes or even 30 to 60 seconds, right? So walkout working journey is by the you come to the branch, we have biometric enabled journeys or two-factor authentication journeys. By the time you're going out of the door of the branch or going out of the website, your instruction is done, executed in the core banking system, right? We have these Insta service journeys all available on our website. We're going to be adding them to the mobile banking app. We're adding them to the WhatsApp banking so that whichever road goes to Rome, whatever road customer prefers, he has multiple options to avail. But we customers want instant gratification, and that's what this is really all about. And not just on the service side, I think all of the proposition journeys we are building. So these are the penetration levels you see digitally. And we have rolled out a digital first mission, which means that if we have a digital journey available, then that's the only thing we'll use. Only under exceptional circumstances where a senior citizen comes in or, Aadhaar server is down temporarily, etc., we can use the non-paper journey, etc. But we are moving to the digital first, mobile first experience for our customers. And not just the standalone journey. See, the opportunity now is the KYC fundamentally is about common, right? I mean, there are few things we have to take additionally for loan proposition. And we're building on integrated journeys like savings plus credit card, savings plus PL, right? So that in one interaction, as long as customer needs are there, we can serve them those propositions. So our productivity per person, once we bring out these integrated journeys, can see a very significant swing on the upside. Business Express is a new platform that we are launching in this month, next month. We are under the testing and CUG group right now. So for business customers, other than the base banking, right, the baseline banking, we are going to be offering bulk salary transfers, salary payments, GST payments, integration with a tally or an accounting software, Zoho, whichever customer wants, tracking their invoices, all of those stuff, even integration with trade, on-net and SME digital. So trade customers for exports, imports, EBGs, etc. All of this is going to be available at click of a button in one place for these customers. The last growth lever is the rural business, where distribution I've spoken about. That is one lever. But the other lever is that how are we building curated propositions for rural? We all know we have programs, managed programs like Imperia, Preferred, Classic, right? But in semi-urban and rural, a lot of people don't want lockers. What they probably want more is, gold loan and things like those, and probably waivers and discounts on them. And these are the things that are curated for that segment differently. So we launched a relationship management program. One I spoke about, Infinity at the top end. At the semi-urban and rural level, Vishesh. This is again industry first. Nobody in the banking industry has a rural-focused relationship managed program. This is the first one, which has been launched recently, about a couple of months back. We hope to onboard more than 100,000 customers in next couple of quarters. But it's specifically designed in terms of providing health cover, health hospicash cover, gold loan valuation, loan processing, farm inputs. So soil testing and drone spraying. We have through our partnerships. Discounted offers and waivers, we are bringing it live to the customer's door. Rural customer engagement, we are piloting Bank on Wheels as a hub and spoke model, so that we can really penetrate into the smaller towns where these Bank on Wheels will engage with the rural customer, key opinion leaders there, the sarpanches and so on and so forth, put them into the Vishesh program, but through them conduct the financial inclusion and the proposition selling and all of that stuff in a holistic manner. And working with these partners on FPOs, farmers, and that entire ecosystems. We are training our people on ODOP. Many of you have heard about it, one district, one product. We map 107 of those ODOPs in the country, so that those local ecosystems, be it dairy, be it ceramics or anything else, we train our people and build curated propositions for those this thing. You see some of the results in terms of YY growth. In Suru on deposit, we've grown 3 times the industry growth rate. The industry has grown by 8%. We've grown by 25. Wholesale assets, the CRB assets that you saw in the presentation, we've grown by 40%, and on retail assets, we've grown by 29%. So these are the levers, and these 7 differentiating factors plus the synergy value of the merger. We believe we have a credible strategy in place, and the plan is to continue to grow at 1.5 to 2x of the industry and be able to double our franchise in semi-urban and rural in 3 years' time. So that's all from my side. I'll hand it over to Smita and then Rakesh, and then we'll come back for the Q&As.
Good afternoon, everyone. So I'm going to present alternate banking channel and partnerships and GIB business. So I'm presenting alternate channels first. You know, in 2018 is when we started building up this, we started, you know, entered into agreement with Common Service Center and decided to build up this channel. After having all the approvals in place, regulatory approvals in place, processes, building journeys, etc., we went live in 2019. Unfortunately, COVID struck in March 2020. While the journey was slowed down, but I think we are ready to take off now. So if you see in April 2021, we crossed 1 million product. In 22, we did 2 million product. April 23, 3.9 million. April 24, 6.5 is what we hope to achieve. And by 25, we should be hitting around 9 to 10 million products and cross a 1 lakh crore business book for assets and liabilities. So why this channel and why this model? You know, historically, banking correspondents have been in the banking industry for several years. They were set up to open Jan Dhan account and for domestic remittances. But we all know that 90–95% of the population now has bank accounts, and UPI has changed the way we do payments, and domestic remittances are coming down. So time to reboot, upgrade, relook at the model which was supposed to bring in financial inclusion, growth and development in the rural economy and all parts of the country. And by the way, banking correspondents are present everywhere, whether it is metro, urban, rural, semi-urban, etc. So why now and what has changed in rural? 6,64,000 villages, 2,54,000 panchayats, 10,000, close to 10,000 towns and cities, 1,63 bank branches, all of them have existed. So what has changed? I wouldn't say that rural India is changing. I would say rural India has changed. Adoption of technology, optic fiber network reaching to 70 to 80% of panchayats in the country, mobile penetration. We know that mobile penetration and content consumption and data consumption in rural India is probably highest compared to anywhere in the world. So all this has actually opened opportunities for all businesses in the industry. And for us, what we want to do is leverage adoption of technology to take banking services and products to the last mile in the country. So we took the combination of financial inclusion model and fintech model and did plus plus for HDFC Bank. So you see the combination of financial and fintech model which has been shown here. And in addition to that, we have built a distribution model which is hub and spoke with the branches to cover all panchayats in the country eventually. This is all based on digital infrastructure. All the journeys which are integrated on this channel are digital. We have built operation and service capability at agent center. Complete range of liability, asset, and payment products are there integrated in the channel. And now we have also built digital platform to acquire new to bank customers. Key pillars. So distribution obviously is our biggest pillar for this channel. And we want to, the biggest partner we have is Common Service Center. But over last 2–3 years, we have engaged with more partners. And the strategy is to engage with the right partner in the right geography, in the right segment, de-risking ourselves and ensuring that all the opportunities which are available in different parts of the country are captured. Key focus segment, the idea is to capture the entire ecosystem, whether it is rural, whether it is semi-urban, or whether it is small urban center. And I think everybody knows, but we have built products for all the segments and are systematically ensuring that we gain market share in each of these segments across all geographies in the country. The extension to the existing segments are government departments, collectorates, defense, railways, mandis, etc., because all of them are getting digitized, and it gives us opportunity to again integrate our APIs with the agent centers there and sell banking products to all of them. So This is the most important pillar of strategy we have. So in our existing agent and partnership network, we had 44 APIs, which we did over last 3 or 4 years, integrated with our partners, where they could cross-sell all the bank products and services. But in this journey, we realized that, if we have to build product APIs, customize them for the partners, there had to be investment on technology on both the sides, and it was time consuming. To onboard a partner, it could take a much longer time. So last year, we decided to build a digital distribution platform for our partners and agents. And I'm happy to share that we have already launched this platform on 24th April this year. We are currently live with 8 products on this platform, and rest of the products will go live by end of this financial year. So Smart Sathi basically is one app for all agents. It is seamless, it is agile, and it is scalable. It is common app for all agents, so nobody has to build separate technology for becoming HDFC Bank's partner. Onboarding of partner can be done in 1 week's time, which would take months months earlier. All banking products, whether they are liabilities, assets, payments, etc., are integrated on the platform. So once the agent and partner would be onboarded on the platform, training is done, they can start selling HDFC Bank's product and services. Not only this, all the transaction capabilities are built on this platform, and 180 services will also get integrated. So an agent would be able to take care of customers' needs without any intervention, or requiring any intervention, or going to the branch. So it is a platform built to sell products for all verticals in the bank through partners. And this is eventually, we are seeing, when I quoted the number or was telling you about the journey, this is the business which we are doing for all the we will be doing for all the verticals in the bank. And by the end of this year, this platform will make sure that entire customer life cycle management is taken care of. Multilingual capabilities are there for agents to actually sell banking products. Onboarding, training, products, journeys, sales, operations, and services. All this will be there on the platform. I have a small video. I'll see if I have time, I'll show you. It's a 1-minute video to actually give you a live demo that how the journeys work on this platform. I think go back to that and play. Then there is last slide on this. So this is how our agent, this thing looks like. And see, it's completely digital.
मेरा नाम है सुरेश जलोरा. मैं 2019 से CSC और HDFC के साथ जुड़ा हूँ. HDFC के साथ जुड़ा तो से हमें काफ़ी बेनिफिट हुआ है. हमारे पास जो पोर्टल है तो हम उसमें लीड जनरेट करते हैं, तो वैसे ही वो लीड प्रोसेस होती है और कस्टमर्स का पॉइंट टू पॉइंट हमारे ऑफिस से ही काम हो जाता है. उनको कोई ब्रांच विजिट करने की ज़रूरत नहीं, कहीं जाने की ज़रूरत नहीं है. हम अपने सेंटर पे इंस्टेंट सेविंग अकाउंट की भी सुविधा देते हैं, जिसमें कस्टमर को जो अकाउंट नंबर है वो भी तुरंत मिल जाता है. उनको वीडियो KYC लिंक है वो भी तुरंत आ जाती है कस्टमर को, और वीडियो KYC सेंटर पे ही प्रोसेस करवा देते हैं.
After opening an account, customers can withdraw and deposit cash and also avail FD services without having to share any additional documents. When applying for consumer durable loan, the agent captures basic customer details in the system to check the eligibility as well as the loan amount that can be offered. The customers are handed over the sanction letter within 5 minutes. Our agents also facilitate seamless EMI collection at their centers. With our quick and secure, digitally enabled services, we empower our agents to improve their businesses and bring a positive change in their lives as well as the lives they touch.
So aims to cover all active panchayats in cities not covered by bank branches, and also support the bank branches we have. Technology, all acquisition and services through digital journeys. There is nothing which is done on paper, and if actually there is paper, we take time to build it digitally, because through agents, we don't encourage anything which requires paper. This model does not have any infrastructure cost, any staff cost. Agents does business, he gets paid for it. There is no fixed cost paid, so it's a variable cost model, and which makes it a low cost, low acquisition cost model. It's a self-funded channel. We take our targets accordingly. The amount of liabilities we raise, we do that much assets. 68% of the assets which we have done qualify for PSL. And unbanked rural areas, which is the bank's requirement for a large expansion of 1,500 branches, gets catered here, and it saves a lot of cost for the bank. Not only business, it also has social impact. The vision is to eliminate middleman, digitization of panchayats in the country, and increase digital and financial literacy. Okay. Few slides on government and institutional business. The key tenets of our business are dominance in agency business, leveraging flows from welfare schemes and grants from Finance Commission. Granular business solution is a key enabler for CASA, exploring new areas based on the budget announcements by Finance Minister, and unlocking potential of institutional business. This vertical started 4 years back, and I'm happy to share that we have 8% share for total government deposits in the banking sector. Dominance in agency business, 34% is our share in CBDT, goods and services tax, 14.4%. Custom duty, we went live just 1.5 years back, and we already have 13% share. Why is it so important for us to do this? Because it has a multiplier effect both on our assets and liabilities. You can see that customers who pay taxes through us, what is the impact on their balances, and obviously it helps us, they become more asset eligible customers as well. We are one of the first banks who have integrated with eNAM, eFreight, GEM, and all the other government portals. This is something which I'm very proud to share, that with our operations, technology support, and building capability, supported by our distribution network, both branches and ABCB. Today we have 36% market share in centrally sponsored schemes, which means that the funds which are disbursed by central government, 36% of them go through HDFC Bank. Leveraging, and this is the second part of this, in the welfare schemes, HDFC is number 2 after SBI. When I say welfare schemes, it is Jal Jeevan Mission, National Health Mission, Pradhan Mantri Awas Yojana. See, government business is all about payment and collection and building up scale. I mean, every such scheme requires lakhs of transactions to be done, and HDFC Bank has built capability to do that. So schemes under 100 crores and 15th Finance Commission is something which is big focus area for us. Now, government is becoming smarter in managing their fund. They have introduced just-in-time model. And for us, when we have built a scale where we have 36% market share, if we build a strategy to retain the funds, our liability book will definitely increase. And what is happening is those funds get disbursed at district, panchayat, and urban local bodies level, and it goes to beneficiary. So we are working systematically to build a strategy to open beneficiary and vendor and Saksham accounts so that we are able to capture government funds. So even when they disburse and the funds move out of state government, we will be able to capture them. Technology solutions is a key driver for our CASA growth. We offer standard solutions as well as customized solutions, and you can see the impact on balances. New initiatives, you saw that during the budget announcement, these were the 5 ministries where a large allocation went, and HDFC Bank has connected with all of them, working closely so that we are able to get larger pie of their funds. Institutional business, education and religious institution remain our focus, and our vision is to see maybe a QR code on every donation box of a religious institution in the country. Just to give you an example, 2 weeks back, we got a QR code done in the ancestral temple of Baroda royal family, and within a week, he got collection of 6 lakhs. So you can imagine what is the kind of potential this have. We all know that in India, religious institutions have a lot of money, and everyone sends their children to educational institutions. So fee collection there, we have almost 18% market share out there. So this remains a big focus for us to build balances and have penetration. We want to be a dominant player in all the segments we report. Thank you. So this was in brief about government and institutional business and alternate banking channels. We'll be happy to take questions after Rakesh presents. Thank you.
You will, I'm sure most of you track it. Bank today starts at managing about 1 lakh crores AUM, out of which the wealth department, wealth group manages about 73,000 crores of AUM. We have 1,41,000 clients which we manage. I'll just come to the opportunity here. Our managed base in the bank is about 1.3 crores. We are just at 1.4 lakh customers here. So just wanted to say the extent of opportunity for segment which is managed, which needs wealth services is significant. This 1% is what we are serving today. A bank on the mutual fund, just because this is a tracked market share, there's no public data available on AIF PMS, so we can't show it to you. The market share currently is 5%. In terms of, there's some historical data, but a lot of discussion happens of whether what is happening to individual AUMs. So you can see there's a 16% CAGR in the individual AUM growth. Industry assets are growing. Individual industry assets are growing from 55 to 58%. A lot of discussion about what is happening on T30, B30. Very gradual shift between 3 years. You can see there's a 1% shift between B30 losing, gaining 1% market share, T30 losing 1%, losing 1% market share. A lot of discussion on free models and fintech models which are all direct. Still, no one can ignore. You can see there's an 18 lakh crore market which is out there, which is still with the distributors. So the influence of distributors will continue to be in this business. There's a lot of questions on which happens on whether distributors will remain, not remain in India, but you can see the pattern. They have, there is a lot of fintech, a lot of money distribution has happened, a lot of VC capital went into it, but it has not been able to significantly alter this trend. This is a public data. All we want to just show you is a burgeoning middle class here. So this is what we wanted to show you. This is a fairly large piece which is emerging out in India. These numbers will also change, while they are all dollar numbers, but this is a very large opportunity. And as consumption grows and as money comes into larger middle class, this is bound to grow and become a very large business. Like other parts of the bank which you saw, we've also gone deeper into geographies. We've now started offering at 923 locations wealth services. We have 70, 75 hubs on which where RMs are located. They travel across and come back and come forth. We hopefully want to cover 1,200 locations. It is very much mapped to what Arvind does. The idea is to map as many locations where Arvind is serving. We have 846 customers, 846 RMs, sorry. In terms of, there was a question a few years back, I think a year or two back, what are we doing on alternates? Because MF is a lot of people distribute MFs, you guys don't do alternates. So we had a 7% market share in alternates. We have moved that gradually to 10%. We believe this number, given the bank of our size, will be somewhere around 20% in 3-4 years' time. We have onboarded a fair bit of alternates on our platform. The growth in alternates is reasonably 18% is what we are seeing alternates being picked up as far as our client set is concerned. I was speaking to Mahesh at lunch. I think this is the single biggest challenge in the business is RMs, which is our own people. We follow essentially a three-pronged strategy to basically serve our customer. This is at the core of customer centricity. So we have a service relationship manager which manages about 600 odd clients, 600 odd clients. We have a relationship manager which ballpark manages between 90 to 100 clients. And there's an investment analyst who basically also manages about 100 odd clients. So this resource is a specialist, especially on analytics. This resource basically is supposed to manage character relationships. A lot of requests on banking, and entire banking services is largely handled by the service relationship manager. This is a very important point because as you saw in Sashi's slide, employee first is a very important element of it. This is the single biggest thing where we believe bank can differentiate by working with our employees, working with our bankers to make them ready, future ready for serving our top-notch clients. So this is the single biggest investment we are making in our own people to serve our top-notch customers, our H&W clients. We, as you know, there's a lot of digitization. Everybody spoke about it. Working with Anjali, we are launching this particular app very shortly, but this is what the app will do. It is a very intuitive consumer financial services journey. So first, it will get into goal setting. You can see goals are defined on the top: dream home, exotic vacation, wealth creation, car, and so forth. Then you get into auto risk profiling. You can choose your risk. You can even test whether what you believe is risk profile is moderate, conservative, or aggressive. Then it gets into curated recommendations. So it basically at the back end, an algorithm essentially selects a certain set of funds based on your risk, parameters of what your risk appetite is and what your return expectations are. Those curated recommendations then form, you see what your recommendations look like, right? So you can see a portfolio. As Sashi spoke to you earlier, it is an open architecture, so you can see funds from everywhere. And you can see the fourth button is invest now. So exactly fourth button, we are attempting to give you a consumer experience that the fourth button will have ultimately an ability for the customer to make it extremely simple for the customer to transact. And this is meant for our largest non-managed customer base. This is a snapshot you get every morning out of this app. So you know what your portfolio looks like, what plus minus, you get a whole family portfolio picture, you get your SIP calendar out here, and a fair bit of other stuff rolling out here. And ultimately, depending on a certain frequency, we look to rebalance the entire portfolio. So this is our digital app, which we hope to be launching maybe in the third quarter of this year, third quarter of the year. It is currently under CUG. And this will be a mass market app for us. So essentially what will happen is, if you go back to, so this is what our architecture is going to be. This is going to be physical, this is going to be virtual, and this is going to be managed by the app. So these are the three segments. On a holistic basis, we'll be able to track the entire funnel of customers through this architecture, basically. That's it. We'll be happy to take questions.
Yeah, my first question is to Arvind. You guys mobilized 2.2 lakh crore of deposits in FY22. That's gone to 3.3 lakhs. I'm talking about incremental deposit accretion. Now, that's a 20% incremental market share. Now, the system itself is actually, Arvind, growing only at 10%. So, how long do you think this 20% is achievable? The reason why I'm asking this question is, if you look at the RBI data, the top 20-25 cities almost contribute 60 to 70% of the overall deposits, going by the RBI's disclosure. And if you're planning to open, say, 50% of your branches in the metro and the urban areas, those are very saturated markets. So, and you're offering a price which is even lower than that of competitors, right? I mean, barring the top three, obviously, everybody's at the same level. So what differentiates? From where are you going to get these deposits? I mean, and if you're going to continue at this current run rate of 3.3 going to 4.5, how are you able to mobilize it with so much of depositor saturation in a way?
Right. So Suresh, the 7 differentiators that we shared with you, that's exactly at the foundation of the credibility to the fact that we can deliver a growth which is sort of 1.5x to 2x, okay, of the industry. Very difficult to pinpoint and say whether every year it will be 1.8 or 2 or 1.5, but in that range. And the biggest proof of the pudding is that to be able to deliver 24% retail deposit growth, and I think 22, 23 at an overall bank level, in a year when the industry was not supporting, right? So sometimes there could be a wave in the industry, like during COVID time, a lot of deposits came in the initial period and so on and so forth. Now, when that happens, all the banks typically go up, right? And these are the times, last 18 months, where liquidity was tough and it was difficult, that the only way to grow was grow market share, right? And so at the heart of it, there are 2-3 things. One is, when we're looking at branches or smart banking lobbies, they're a lot more focused on the micro market approach, right? So it's not that we are putting up a lot of branches in the metros and urban. See, a lot of our expansion is happening in towns where we have no presence at all, right? Zero presence. Lakshadweep is a 700 crore market. I have zero presence there, right? Lakshadweep, right? There's a town in Himachal where we expanded 600 crore market, and if you're not present in that town, very difficult to be able to relate with the customers and, to be able to do that. Second expansion is coming in places which is, you have one town branch in that district, right? And it is already reaching 800,000 crores, right? And that's what you saw, the network effect of distribution expansion, that the districts where we gained higher than 20% IDMS was in places where we had the right expansion happening within that district. So there's a lot of science going into where exactly we put it up, right? How do we track the profitability model? How do we put the institutional machinery of catchment scoping? Now 3.9 lakh customers, you can ask that which bank would have 3.9 lakh customers, new to bank opportunities, mapped A to Z in their CRM, right? I can share more details, but and there the liability potential is exactly mapped. And I know that what is the kind of conversion funnel we can get. So if I have to deliver, let us say, much more than the number we delivered last year, I broadly know that what is going to come from this, this master initiative piece that I'm talking about, what is going to come from my CIB, what is going to come from the FD propensity base. And so those pillars are fairly well established. And rural, when you see that it's not just about expansion alone, right? It's about expansion, it's about putting different propositions in those markets. When you go to a town and the sarpanch, you do a customer engagement program where he's co-opted into doing the stuff that you are doing, then you have the spokesman batting for you in that particular town, right? When we initially did, for example, the Bank on Wheels pilot, it didn't work, to be honest. We had tough time getting customers, and we were thinking whether we should do it or not. We combined that with a sarpanch samman samaro, right? When Sarpanch Saab came and I'm doing financial education, the whole thing, the scenario completely changes. And we are tracking cost to income on the profitability side of even the Bank on Wheels, right? I know what is one would cost in a month and what is that we're going to deliver. On top of that, merger is a fantastic opportunity, right? 70% customers, I'm sure you guys have been tracking the HDFC Limited also. Look at the profiles, affluence, super affluence level, right? And there are nudges and relationships that can be built, which we never had the opportunity, and now post-merger we're going to have that opportunity, right? So that work will happen on both the 70% base, not through a mandate, but through nudges, relationship anchors, and providing our banking services. All these HDFC Limited branches that we see today will mushroom into banking outlets and mushroom into home loan focused, but at the same time providing all gamut of banking services. Right. So that's a massive opportunity that's going to sit on top of these 7 differentiators.
It's still early days, but this 2,000 rupee thing, would it have some impact, positive impact?
Honestly, this one, it's like crystal ball gazing. I know in the media last 2 days, 3 days, we have been busy in operations part of it, but very difficult this one is very difficult to say. But I'll only say one thing, I'm not counting on any positive spin on that. That's not budgeted into my plans. If something comes as a result of that, that's like God's gift, right? So,
and Rakesh, just one last question to you. Some of your larger competitors like India Infoline, IFL, and Kotak, they obviously have much larger AUMs in the wealth side, and they have been in the business for a long period of time. What do you think they are doing better? I mean, you have a much wider platform, larger customer base, but still obviously in terms of size and I don't know about profitability, those metrics are not published, but what do you think is the scope for improvement, and any color on that?
It's a very simple business, so we'll just keep it very simple. We need, our job is to provide, wealth services to clients. We'll continue to do that in our customer base. We believe it is a very service-oriented and architecture. We'll continue doing that in a manner in which the platform, which you saw the platform, which is basically a three-pronged platform of service, your wealth relationship manager, as well as the investment analyst working on the client, working with the client to deliver what he or she is expecting to do. Just follow that mechanism. It is a reasonably opaque industry, as I see. Who manages what is in terms of something is known, something is not known. So I will leave it at that there is enough and more for everybody to work at. We have to know where the real money lies and where the money lies for everyone. We do believe that for us, it lies a lot more in our own customer sets today, okay? Because we are at the convergence, we are the largest lenders in, let's say, to the best of businesses. So our customers are going to be promoters of various companies on one side, especially the smaller businesses. And on the other side, there are the professionals who are working, and both of them are short of time, and they definitely need this kind of service. And we believe that that is the customer segment to be served as far as wealth services are concerned. So we are sticking to that. We are not so excited with the very top end of the pyramid, which looks very overbanked to us and also look very price sensitive to us.
Yeah, hi. My question is for Arvind. So, last year, of course, you mobilized a very high incremental market share of deposits, and your track record is also excellent in all tough years. So it's not only last year. But last year, a lot of banks were not chasing deposit growth, and not only because of rates, etc., but also because they had a lot of excess liquidity, and some of them also wanted to maximize margins. So they were sitting on high LCRs, they had high liquidity, and you pushed your RMs also, they've done a fantastic job. So now the base becomes very high for you, plus competition now is in real need of deposits, which it was not last year. So does that impact the competitive dynamics of deposit gathering this year? Because last year was a comfortable space for many players, though of course incremental deposit taking was tough.
So, first of all, when we planned last year, the competition, there was no competition with anybody else. We knew that we had to increase our market share, and that's an imperative for us. And if you look at our IDMS graph, it's been sustainably increasing. If you see 2 years back, it was 9 or 10%, then 14%, and then 20%. And so in a way, we have been, these 7 differentiators that I spoke about, it's been competition with ourselves. And I would like to bring out another perspective to you when you say we are large. We see ourselves, fairly, I shouldn't say small, but definitely not large. I don't know what that means, but what it means is that I have a 10% market share in the country on deposits, right? Compared to that, in terms of the quantum of runway available for growth, right? We have 90% of the market available for growth, okay? When you look at our numbers, yes, we are the second largest bank in the country. After merger, the gap will further come down. But I think that's one way to look at it. The other way to look at it is that the growth story is 90% is still up for the taking. And I'm pretty confident that these 7 differentiators, if you look, and there's a lot of work in the 7 differentiators to further sharpen up. You look at NBA 2.0, right? You look at the way we do our master initiative, the catchment scoping and that whole work. You look at the service first and the way we have put a rigorous focus on NPS. And some of these things are difficult ones to do because NPS, for example, tends to become a score in most of the companies. I've led that 2-3 times in my career, and it mitigates to a score, and that's when you lose it because it has to be an improvement mission to, and there's so much things in large companies to improve. So you look at the fundamentals of these 7 differentiators, and on one side as input, and look at 90% as an output available for growth. I think the runway is very massive. So definitely you should see it as definitely not big. That's probably the way to sort of describe us. We have massive opportunity, to grow.
If I can add to what Arvind is saying, Marukesh, if you see our structure, as the customers keep moving, as the platform gets stronger and the network keeps increasing and becomes stronger, the businesses gradually gravitate towards a stronger franchise. And you will see that in both individual and corporate clients. It's a very similar way how deposits are moving. So deposits are not moving on their own, they're moving along with the businesses which come on the platform.
And look at how you can build this engine to the next level of rev up. Suppose you're talking to a customer, right? And it's not just, one is the deposits part, second credit cards, loans and all of that stuff. Even today, most banks are doing one product conversations, right? And if a customer needs a credit card, there's a different form, there's a different thing, right? When you have integrated journeys come up, in one interaction you can pull out, you can pull out two products or two propositions. So the productivity improvement scope is still very, very large, right? Today, when I am just explaining to you the opportunities, NBA 2.0 that I speak about. Today, when we built the NBA, but you have to go screen by screen, and RMs have to sort of look at that. Now, if you can convert that into, I'm sure all of us have heard about Chat, GPT, and Gen AI, and so on and so forth. If you can convert it to just an engagement script, right? I mean, students in universities are doing it for the wrong reasons, but the RM productivity can grow by leaps and bounds, right? So those things will be further layer on top of all that we have built. And I think in these 7 differentiators, on these 7 areas, you will see a lot more stuff coming out over next 2 quarters, which hopefully next year will brief you along with the results, because we believe that any initiative is as good as the outcomes it produces. So we have enough of the initiatives even beyond within these 7 areas. And I think over a longer term, I think 1.5 to 2x is that range is what we should be able to outperform industry for a very, very long time to come.
So competition getting more aggressive because they'll now really need deposits should not be a big challenge.
Not at all. Not at all.
Okay, thank you. Thanks a lot.
Yes.
Arvind, again, in the morning, Sashi talked about changing the approach from product to customer, and you alluded to as well. Can you just, help us imagine operationally out of branches how you're trying to achieve that? And when you talk about productivity gains, even reflecting in the deposit side, how is your team sort of trying to achieve that?
So the tool that I mentioned to you was the recommendation advisor. So in CRM, what the recommendation advisor that we built, it describes 4 or 5 areas for every customer. So every customer ID, if I put, the first thing would be service enabler, right? Which is like nomination, re-KYC, because we want to start with service first. So those 2-3 things will appear. If any complaint, queries pending, that will become visible to the RM. Then is your CASA and FD enablers. The CASA enabler, value enhancement basis wallet size, predictive loss of relationship, all of those things, 2 or 3 things will reflect. Then it will be the NVA for loans and cross sells and third party and mutual fund, all of those things will reflect, right? So those are the 4 or 5 tabs that the customer, the RM would see when he puts in the ID. That brings in a customer centric approach, that in one conversation, what he calls is the CEP narrative, customer engagement. There is a frequency at which we have to meet customers. In one go, he can finish all the conversations and that are predictively analyzed, so that, and that predictive engine has to be continuously improved, right? So this is NBA 1.0. NBA 2.0 is, I actually build a script for him that he should not even look at nomination re-KYC. I am able to predict so exactly that this customer nomination is pending, so under service only nomination is to be spoken about. In CASA enablers, only this one enabler is relevant. And in loans, he looked at the auto loan, which we call is immediate NBA, in last 1 week on the website. That means he has a high purchase intent for auto loan. And actually just give him a script and then online coaching, online monitoring, right? So, so this is how we implemented it today. But I would say give us 2 quarters and we'll show some cutting edge stuff on this area.
It's already been implemented?
NBA 2.0 is not implemented the way we are envisioning it at anywhere in the world right now, anywhere. Right? ChatGPT is the only deployable platform. There are elements that we have to discuss and look at how we can use Gen AI, whether it's ChatGPT, whether it is DALL-E 2, whether it is Whisper. Whisper can convert, speech into text. My RM doesn't need to report anything into the CRM. You finish your conversation, app tracks it and puts it into the CRM. So drudgery gets out of the way. Imagine that world where you're doing only customer focused work. So customer centric approach is implemented the way I explained to you, service enabler, CASA, FD, NBA 1, 2, 3, etc. Right? But the whole efficacy of this is going to become significantly higher when we bring in those cutting edge tools. And those are not even JP Morgan Chase has done it so far in US. So nobody in the world has done that, right? So it's going to be cutting edge stuff if you're able to do it, and we will.
Sounds interesting. Smita, just a quick question to you. CSC, of course, is quite promising, and then we hit COVID. But you know, just to imagine 2-3 years out, what kind of PSL loans you can generate for the bank, you know, out of the CSCs? Any rough estimate? You talked about 1 lakh crore of advance deposit, if I'm not wrong.
So I would just say that what we have done. So out of what we did, 68% was qualified as PSL. So the kind of segment which we operate in, and right now with the focus on semi-urban, rural and small urban, I think a large part of assets which we'll do from this channel will qualify. I cannot give you a number right now, but it would be right to give me maybe a year later.
Rakesh, quick question. So your market share you talked about was AUM, if I'm not wrong. The commission market share would be higher than that, safe to assume?
Yes, the commission market share is definitely higher because we have a larger proportion of equity assets, so it is higher. Also, the commission market share, you know, if it is a good way to just look at the trail income of, we don't publish ours, but we track what is published of the competition, and it is suffice to say that we know where we stand vis-a-vis competition when we look at the trail income, because ours is a recurring income, so we know exactly what recurring income are we currently tracking. I think if Singh wants to publish it, he can at some point of time if he wants to publish the number. But we know what is published for the other competition where we can see what numbers are. The advisory, we don't do advisory. So that's why, you know, irrespective of the large, let's say a large asset pool which you can see, if a large proportion of that is advisory assets, you don't make as much money on advisory assets. So we've consciously chosen a distributor model for mass part of our portfolio. Advisory is only above a threshold of 50 crores plus, which is why, you know, we have been able to retain, and we still believe that most of our customers expect us to do a service model. We've seen customers actually very large, you know, we have seen at least, I would say 100 customers who have moved from direct to a service model, which is difficult for you, difficult to believe, but they've moved just because when they went direct, it was difficult for them to manage on a regular basis. And these are all clients with AUM greater than 20 crores. Because time is a bigger constraint actually. When you want to execute, how do you go, when do you go, can you execute or not, nuances of, you know, people traveling, it becomes very difficult. And an RM ensures that everything is taken care of.
Helpful. Thank you.
Yeah, just one question on branch banking. Like, you know, we are planning to open many branches, you know, in the coming years. So the question is that what are those key starting points that, you know, in the presentation you said that about, you know, taking help from Google and, you know, the locations where we have, you know, more than 250 crore, you know, deposits and those things. So if you can just, you know, list maybe, you know, what are the key starting points that you are looking at, that where we are going to set up branches. And, you know, on the other side, like we see that, you know, PSU banks are not opening many branches now. So they have kind of, you know, like post consolidation actually, there is a, you know, they have done some trimming of branches. So is it only the market share game that we are looking at, or like, you know, or we will grow just, you know, on a sustainable basis, we will grow with the market? So two questions basically, what are the starting points for the branch we are open, and the deposit market share or the sustainable growth? So these two things.
So I'll just probably build on 2-3 things. First of all, we don't have a top-down approach of branch banking in terms of numbers that we have to do. See, objective is not to have a number to begin with and then find places. That's a very important point that I want to just table with all of you. Objective is to identify at a micro market level which are the markets. See, please understand, 90% share I don't have in the country, or 88 or 89, whatever that number. That much we all agree. Then there must be underserved parts of this country if I don't have 90% of the market, right? Look at it from that point of view. So the approach is to identify underserved parts of the country. If there's a town, right, and this Himachal town that I'm giving an example where Shashi had gone to inaugurate, 600 crore market size, no private bank, zero, all of them. We're the first one to enter. It's almost touching 20-30 crores. So the point is that identification of underserved markets. Right? When I read a lot of comments, I think some of that stuff probably we have not been able to communicate as effectively. That one, we do not have a top-down number of branch expansion, right? It's a bottoms-up planning number using all of the things that identification of underserved market basis, the town size, pin code size, market data on deposits, on advances, on delinquencies, within those pin codes and towns, then look at micro markets which could be underserved for us, right? And micro market could be a large university campus, and I'll give you another example from that point of view. I'm sure in Delhi, this Air Force, near Dholakua Air Force city town that we have seen, right? 3 PSUs inside. I had an ATM. We converted it into branch banking lobby. One guy sitting inside. That is my SBL. Now, if that place takes hundreds of approvals to go in, because it's like a secluded place, जो अंदर है वही धंधा करेगा, जो बाहर है वो धंधा नहीं करेगा. So through my SBL route, now I'm inside. Now they may have large branches with just 400, 500 square feet. We'll be able to pick our share there. So the idea is to identify underserved markets using a multivariate approach, bottoms up planning, right? Then putting a right format there, which could be a branch, which could be an SBL. There are 2,000 places I have requested Smita to give me BCs and give us BCs. Why? Because those places I'm not planning to see that these are underserved, but the right format may not be a branch there. Right format may be a BC there, right? In a certain potential band. So these are the 3-4 elements I would just like to table with all of us. Bottoms up, underserved market focus, right? And a very, very cost efficient approach in terms of the format that we look at it. Does that answer mostly?
Yeah, that is quite elaborate. Secondly, that, the market share thing. So starting, low hanging fruit would be the, market share, gain. But how the growth would be after some time, would it grow just with the market or, or it will be just a market share game perennially that you are looking at?
No, we're clearly looking at market share gains. Okay. That's clearly our strategy. If in 86% of the districts that I'm present, we have gained market share, then that's the only strategy that we have. In Suru, if we have grown 3 times the industry, then that's the key strategy that we have, right? So, whether market grows or not, at some level, I don't care. Because I still have 90 rupees of the pie. If the 100 rupee pie doesn't grow, no problem. I still have 90 rupees to gain from, no. So, we are pretty cool with that. And we believe we have a strategy to pick up a larger share out of that 90 bucks or 88 bucks.
Got it. Thank you. Thank you so much, sir.
Yeah. Thank you. Thank you.